What's happening, everybody? Hey, great trading day today again on home. And over the last about week that I've been involved in this trade, one account's been up 40.7%, the other one's been up 43.4%. One account is up $31,633, the other one's up $40,573, collectively a little over $72,000 in profit. I'm completely out of the trade right now, but I'm definitely looking to get back in. Looking at a trend continuation trade with this, and similar to what I did in the video a couple days ago, I'm going to go over jumping on the trend, finding the best place to do it that's going to yield the least risk to the downside with the most potential profit to the upside. So let's figure this one out. I'm going to go over with how I got involved on how I rebought on the last one. I'm going to go to a 1 hour look here. This is a 1 hour chart. So that first time that I sold and first time that I rebought was right here. I'm going to also talk in this video about Fibonacci and also the significance of the 382 retracement, because that's really what we're looking at right here. And it's a very nice little technique that tends to work in heavily trending markets, which is what we're looking at right now. But this last move right here, I want to focus on right here, and this is what we were looking at on that one day when I decided to take some profits, but then I rebought pretty quickly due to what I saw right here. And what I looked at, so I started measuring with the Fibonacci retracement from my lowest low to my highest high, which at that point in time that I was looking at it, it was this candle that was right here. I'm going to fan this up so we can all see it. It was this candle was the top right here that I was looking at right here. So I was measuring from right here, and you can see when it started to pull back, and I can look at my RSI, which I have set to a 7 period right here in the way overbought level right here that I was looking at. So that's one area that I thought would be a good area to take some profits on. And what I was looking at right here is that we're getting a retracement down to a 382, which was at 337, and it found some real big buying pressure right at 382 and shot right back up. Tested it once, twice, and then as we got to this candle, I'd actually have to redraw this retracement just a little bit to get to that highest high candle right there. So it found that 382 once, twice, almost 3 times, almost 4 times. Then these two candles right here, just about 6 times, bouncing off the 382. And one thing to understand is that 382 retracement tends to indicate trend continuation. When you get a turnaround at the 382, that tends to indicate trend continuation. But it's not valid per se until you get a higher high, higher close candle. What I mean by that is I'm looking for my lowest close candle, which at that point in time is would have happened. This was my lowest close candle, which was right here. So what I'm saying by that is as I get this candle right here, this closed at 353. This was my lowest close candle, which was at 346, and my high was at 349 on that. So this closed above my highest high on my lowest close candle. So that's a buy for me, and my stop would go down below my lowest close. Okay, so that's what I'd be looking at for my stop loss, and the reason being is if we by this highest high, or by this higher close candle coming in, you're now saying that you've defined a higher low right here, and you don't want price action to get below that higher low. Otherwise, you're no longer in trend. You're no longer in trend of making higher highs and higher lows. You'd actually be making a lower low right here if it got down to here. So that's why you want to put a stop loss. It would be at about 328, which is what I did. But again, this candle came in and closed above. I had a 382 retracement. I had my lowest close candle, and this candle closed above the highest high of my lowest close candle. That to me is a buy. Typically what happens psychologically is anytime that you get a nice little bounce like that, sometimes you have some bag holders right here that decide to take some profits, which is what happened right here. But did it get anywhere near our stop loss? No. Price action went ahead and continued off of there and brought us to our price action today. But that's what I was looking at right there. We had a retracement of the 382, higher high, higher close candle. That to me is an indicator for a buy in terms of trend continuation, and that is exactly what eventually happened. It continues straight north, which is, like I mentioned, which is where we're at today. So turned out to be a great rebuy. And so now what I'm looking at right here is clear something. Actually, clear all this out. Same type of thing right here. We break above. Now we're pulling back right here. But take a look at this. If I draw retracement, and I'm going to retrace this entire move right here. Okay, this whole move right here. Drawing a fib retracement from my lowest low here to my highest high right here, and take a look at what we get. Look how significant these Fibonacci numbers are. Look how many decisions are being made by people at this number that's ultimately mathematically drawn in. This whole run right here is retracing right back to that 382, and it stops. This candle opens up, and now it's starting to bounce off that 382 again. If, this is again my if this then that syntax that I build up in my mind, I'm always staying within what's called the OODA loop of the market. Observe, orient, decide, and act. I'm observing myself to what's going on in the market. I'm orienting to what I'm going to do. I'm deciding on a plan, and then I'm acting. I'm always within the OODA loop of the market, so whatever happens, I have a plan. So my plan for this is if we get a higher high, higher close candle, same thing that I just described right there. That's going to be my lowest close candle right here. And my highest high of this candle is going to be 321. So if I get a candle that comes in at 322 or above, then that to me is going to signal that this is my new low. I would have a stop loss go below that swing low, saying about maybe 387. My buy is going to be, like I said, I got to wait for that 1 hour candle to come in that closes above 421. So if I get a candle that comes in, closes at, like I said, say about 422, that's going to be a buy for me. And I'm anticipating on price action to continue up north. But if I'm getting, again, that turnaround right at that 382, that'd be a huge rebuy for me. And again, it defines, by utilizing this method, it defines what my purchase price is going to be. It defines what my stop loss is going to be and my downside risk. And I can take a look at that right now. If price action puts in that close at 422, I'm looking at a downside risk of about, say, about 8%, and we'll show our profit potential right here. I'm going to do what's called looking at what's called an AB equals CD pattern. I'll go over that in depth in another video, but this is what I'm ultimately doing with that. I'm going to clone that move. Whoops. I'm going to clone that move. Put that on my lowest low right there, and that's what I'm looking at for this move right here is an AB equals CD pattern. I'm looking for price action to come up right around that even number of about almost 550 is where it comes. If I drew it a little bit cleaner, it would probably come in right about 550. So I'm looking for a profit potential of about 550 right to the top of that move right there. So I'm looking at about almost 30% to the upside while risking about 8% to the downside if I get that higher high, higher close candle coming in at 422 or above. Okay. So again, staying in the market's OODA loop, let's just say I don't get that kind of price action in the beginning of the day. Let's say price action starts to press on down. Let's say we put in a lower close candle. Well, what am I going to do? I'm going to do the exact same thing that I just talked about. If I get another lower close candle, a candle that closes lower than $4, then I'm just looking for that higher high, higher close candle compared to my lowest close candle. And once that hits, then I'm rebuying. So I think psychology plays a lot into the market if we haven't figured that out already. I think what's going to happen, if I had to take a guess, I don't know if price action is going to get much less than $4. I think people are going to see anything at $4 as a bargain, and they're going to start to buy it up right about that $4 even handled mark. So I think what I'm going to do is even if it gets down to that $4 mark, I think I'm going to do similarly what I did on my last rebuy. I'm going to probably buy about maybe half a position at 4 and then see what price action does. If I get that higher high, higher close candle, then I'm going to commit to a full position again. If it decides to pull back beyond that $4 mark, then again, I'm just going to wait for price action to settle and see what comes in terms of a higher high, higher close candle, then finish my buying at that point in time. But again, we're looking at right now as it stands, if price action puts in that higher high, higher close at 422, looking at a profit upside about almost 30%. Now let's take it a step further, draw in or come up with even more of a case for exiting at that point in time at about 550. if I draw an extension of this last move, lowest low, highest high, and back on in, I can see that I get a 1618, my mean Fibonacci extension, right around that level right there. So that's one thing that's really nice. Start to get confluence of these lines start coming together at one spot. What I'm most importantly is on my mind, I'm going to draw out a line right here at the top of that line. Then I'm going to look left, and I'm going to see where price action starts coming in at. And look what it starts coming in at. I start hitting some resistance right here, and also the bottom of those lows right there. I think that's a really nice place to look to take targets, is right about that $5.50 mark. I think psychology is going to propel it maybe a little bit further, maybe 550, 560, 570, kind of what it did today. But I think that is going to be a really nice place to really look to probably finish up this trade, for me at least, right around that mark. I can look to play it again, but I'm going to have to look for some specific price action to happen that we'll talk about when we get there. But in terms of retesting those highs at maybe around $7. But for me, right about that 550 mark is I would be very happy and looking to take further action with it in terms of rebuying if some specific things happen. But until then, that's kind of what I'm looking at. So I've got structure coming in at 550, like I talked about, right in this area right here, right around there, pretty significant right there. And I got a harmonic move that's terminating right about that green line, right about that 550 mark. Move it to 1 hour. Sorry, I'm bouncing around a little bit. And I got an extension coming in right around that spot as well. So yeah, are you still bullish at this point in time? Absolutely, 100%. Absolutely. It's just a matter of, okay, well, where do I buy? How do I jump on board? And again, looking for that, keeping track of that lower close candles, but also keeping track of that higher high, higher close candle. Whenever that comes in, that's when I'm taking action. And again, like I said, it defines a stop loss. If you've been in all the way since down here, think about what you've got going on here in terms of protecting your position. You've got a trend that's happening right here. You've got a low right here. You've got a higher low right here. And you've got another higher low right here developing. Let's say that this turns out to be our low. So you definitely want to trail your position to these levels right here. You don't want price action to start dropping off from where it's at, start violating this level or violating this level right here, because what happens at that point in time? Well, you're no longer in trend. The trend's broken. We're in a clear uptrend right now. And until that trend's broken, you want to keep riding that wave. So trailing your stops as we develop new lows. And like I said, I think we're probably going to develop a low right around that $4 mark. We'll have to wait and see what happens tomorrow. But protect your position, trail your stops based off of structure as we continue to increase with the trade. That way, you're just maximizing your profit. You're not giving it back to the market, which can be a very expensive lesson tuition-wise. I think that's about it. Keeping this one a little bit shorter today, but a little bit less to talk about. But that's my plan for tomorrow. Good luck tomorrow. And what if I could grab another 30% out of this trade on top of what I've already done? That'd be ridiculous. So good luck and happy trading. Talk to you soon.